What's going on, Griswold gang? Old viewers, new viewers, old subscribers, new subscribers, thank you to you all and welcome back to another show. Today we're going to go through our watch list, our trade setups for Wednesday, October 12th. I put these videos out for you guys for free every single day, so make sure you're subscribing down below and clicking that bell. The bell gives you the notifications for when I send out videos just like this one every single day. Few things before we jump into this list. Number one, the platform that you see in front of you on your screen is called TradingView. I use this to chart all of my trades. If you've never used TradingView or you are looking for something like TradingView, I have a link in the description below. That link will provide you with a free 30-day trial to their subscription-based services. So you can go click on that link, try their paid services free for 30 days, and then if you decide to actually use their services, you get up to $30 off of your subscription, but you need to start by clicking on that link. One of the other things I want to discuss is the trading Discord, so that link is in the description below as well. So go click on that link and get in on the Griswold Trading Discord. So it doesn't cost anything to join the Discord. The majority of the rooms are free in there. I do have a Griswold Gold membership, so that gets you access to the live trading bots. It gives you live trade setups throughout the day. Gives you the Griswold Strat indicator. It's all the Strat indicators wrapped into one indicator for you to use on TradingView. It has a 1-hour Strat course that I've created. It gives you the top 5 plays every day. One-on-ones with myself, group sessions with the rest of the Gold members, and a whole bunch of other great stuff. So you can check out all that information in the Discord. That link for the Discord is in the description below, so go check that out as well. Make sure you watch the video first, though. I'm on Twitter at Mr. Clark Griswold, so you can follow me there as well. Let's get started on this video, folks. I want to go through some of the top 5 plays that I gave out to the Gold members last for Tuesday. So we'll go through a few of them. We'll see how they could have played out and what would have happened on them. So the very first one I've got on the list is AMC. So AMC was one of the plays I gave out to the group yesterday as a top 5. We had this trigger here. I also gave it to you guys in the video for free, the watch list video. But if you see, we triggered here at 627. The way I would have traded this, guys, and this is me, you don't have to do this. Some people will play it off of the 15, some people off the 10, some people off the 30. I like to hop down to the 15. So, and I'm okay with taking my money and getting out of this trade. I don't need to stay in it all day. Did I miss bigger gains? Possibly, yes, I did. But I know I made my money on the trade. So, let's zoom in on this 5-minute chart. This is your first 5-minute candle of the day, okay? So we break through, and then we come back up, and we break through again. So I would have still been in this trade based off of that first trigger, okay? We opened way, way up here, came all the way up, and then all the way back down through here, and closed. So unless I'm closing somewhere, like this isn't a great range here, from 27 to 34. Probably the top of that body is where I'm closing this out if I break above that. So let's just mark this out. So that would be my first stop loss. Then we open and we break through again. So the top of that candle can become your stop loss. But you're already in profit, so why are you doing that? Make the trigger point, your original trigger, your stop loss, so you know you're leaving this trade with money. Okay, so then this next candle rips down. Okay, what do? Just move your stop loss down to the top of the next wick. Then this next candle breaks down. Move your stop loss to the top of that wick. Okay, and then eventually you're out of the trade. It runs a little bit more and then reverses. So no, you didn't get these gains down here. Could you have held a little longer? Yep, you could have, and you probably could have tried to catch the bottom. I'm comfortable with this trade for me. So that's how I would have played AMC. So now if we go to GME, let's flick to the day chart here, just so you guys can see what we had. We opened up and we came down through these targets. So again, let's go back to the 5 minute. And here is our opening. Okay, let's zoom in for you guys. This is your first 5 minute candle, second 5 minute candle. Then we break through the trade here. Okay, barely. So this realistically would have been your open, where you probably would have got into the trade unless you got in really early just as we tagged on the way down. So again, I'm going to put in a stop loss bar. So this top of the candle becomes my stop loss, the top of the 5 minute candle. And that's how you guys can reduce your risk, is if you trade on the 5 from the daily or from the 30, that helps really to reduce your risk because your candles are smaller and you're getting out a little earlier. Now you might miss some gains and you might miss some bigger gains, but you're managing your risk, and that's the number one job as a trader, is to manage your risk. So we look here, that becomes your stop. Then this candle happens, right? And then your trigger should become your stop loss. Then we move down again. So again, that candle, as this candle closes, the top of it becomes your stop loss. Then we come back through the target. So you can do two things now. You can use this candle as your stop loss, or you use the target as your stop loss. Okay, so then when this candle opens and comes through, two things you can do. Use the candle as your stop loss or use the target. For me, I'm using the target. This inside bar comes back up through it, out of the trade, a second winning trade on GME. I was going to go through a bunch, but we'll go through Keurig Dr. Pepper and then we'll call it quits, I think, and move on to the main list. And Keurig Dr. Pepper gapped up. So I guess if you want to play this as a gap, we go to the 15-minute chart, just like my gap videos show. And let's zoom in on this. This was our first 15-minute bar. So we opened, that little bit of a gap, came down, came up, and then, guys, what we're looking for then is a break of the high or the low of this 15-minute bar. And that's how we play the gaps. Now, we didn't get it. We got this inside bar. So then what you're looking for is a break to the high or the low of the inside bar. Now, we get that break. And then we trigger here at the top of this inside bar, and then we move up, and we move up, and we move up. And how do you play that? Once you break this inside bar, the bottom of the inside bar becomes your stop. As soon as this candle triggers, that's your stop. Then as this candle closes, the bottom becomes your stop. Then as this candle closes, the bottom becomes your stop. Then the bottom becomes your stop. Then the bottom becomes your stop, and you're out of this trade. Okay, it wasn't a great trade, but from 37.62 up until 37.91, not the greatest of trades, but it would have been a winning position for you guys. Okay, I'm going to move on to the main list here. We're going to get started. Those are three of the plays, and I basically just took 3 out of the top 5. I didn't see if they were winners or losers. You know, they were the first ones on the list. Okay, so what do we got here to start? CVS is the first one on the list. So what we've got is a 2 down that finished green. So I would caution you on 2 things here. Number 1, we can look for a 1-2-2 reversal. A 1, 2 down, and then a 2 up. You notice the number, the candlestick numbers. That's part of the Griswold Strat indicator. You can buy that separately from the membership. Down below, there's a link for it. It's $25, one-time fee. Gets you everything included, including the time frame continuity, the inside bars being painted yellow, the outside bars painted white, a bunch of other stuff. Okay, so it's a really great buy, and it provides you a lot of value for all the indicators being in one spot for you. But we have a 2 down green. We're going to look for calls on this thing at 89.70. And the first target, again, is not great. I like to see a little bit more beef on those, a little bit more magnitude, a little bit more space between the trigger and target, but unfortunately we don't have that. The other thing that I would be cautious of, we are very close to tagging the bottom of this broadening formation, so it's very possible we just continue a downward trend on Wednesday. Okay, we'll move on to Roblox. Roblox spread between the bid and the ask isn't great, but we had a 2 down green. We can look for calls at 35.60, first targets at 35.89 on RBLX. CCL, Carnival Cruise Lines, one of the tickers I just added to our live trading bots in the Discord room. 2 down green, we can call that a hammer candle, and we'll look for calls at 674. First targets at 682. Next target there at 699 on CCL. IBM. So a lot of these plays look like this today, guys. We have these 2 down greens, but they look like inverse hammer or shooter candles. So there's a little bit of conflict because the actionable signal would tell you that we are trending down. And it's very possible we trend down to, again, hit the bottom of that broadening formation. But we also have a 2 down green, so we can look for that reversal to the upside. And we'd be looking for calls at 119.23 with first targets at 119.96. And guys, if these plays aren't doing it for you, then play intraday stuff like SPY and QQQ and Apple and look for the reversals there and look for the inside bars there. And the trading bot that I've got in the room gives that stuff out to you guys for free, so you don't have to look for it. But those are the ones that I would look at during the day. Apple, DIA, QQQ, SPY, NEO. High liquid, high volume tickers that you can get in and get out of. That's where I would look for the inside bars. That's where I would look for the reversals. Okay, so IBM right now calls at 119.23. First targets at 119.96. And again, guys, if you're fairly new to this stuff, wait till the end. There's a video playlist at the end of this video that there's a link. So you click on that link, it'll get you to the playlist for a bunch of the learning tool playlists to learn this strategy even more. And I'll tell you right now, if you do this stuff for 6 months to a year, you're going to be a pro at it. You might not be a pro, but you're going to be really, really good at it. But you need to be consistent and you need to do it diligently and practice and look at this stuff. It's just like practicing reading or driving or doing math when you were a kid or walking when you were a baby. Okay? The more you do it, the better you become. So Moderna, we'll move on, has an inside bar. And an inside bar, for any of you guys that are new, it's painted yellow, part of the Griswold Strat indicator. When you see this yellow bar, I want you guys to think of a spring being loaded, because what happens with this bar, it doesn't break the high and it doesn't break the low. And you notice it's got a 1 there. That's a 1 bar for the strat. That's an inside bar is what we call a 1 bar in the strat. So it doesn't break the high, it doesn't break the low. It's a consolidating ticker, and it's the same on every time frame. It acts the same way. And when you see this yellow bar, I want you guys to think of a spring being compacted, loaded, tightened. And if you can picture yourself tightening that spring and then releasing it, it's going to explode to one direction or the other, and that's the probability of it. And you can see here off of this one, we triggered and we targeted. Off of this one, it wasn't great, but I like to go back in time and show you guys this stuff because it barely triggered and then reversed. And what that shows is that there's risk involved in every trade, in every candlestick, in every strategy. There's risk involved. And we base our trades off of probability, but the probability tells me, yes, if we trigger, we should hit our targets, and this should be a good trade. But the risk and the other end of the probability is that probabilities are never 100%. So yes, this one worked. This one gapped. Yes, it worked. Yes, this one worked. But this one that we looked at back here, off of here, it just didn't work. And that's okay. We just need to manage our risk appropriately. And again, as a trader, our number one responsibility is to manage our risk and protect our portfolio, protect our capital. So Moderna has an inside bar. If we get the calls, if this trends up, we've got full time frame continuity outside of the year. So we'll look for calls at 124.78, and we've got first target set at 125.25. And then to the bottom side, we've got puts, and we can look for targets at 118.47 on Moderna. NVIDIA, 2 down green. We'll look for calls at 118.46. First targets, top of the preceding wick. That's how we mark them out. 121.24 on the calls. Oracle, this is another one of those 2 down greens, shooter candle or inverse hammer. So a little bit of conflict, but we'll look for calls on this one at 163.10. But don't be surprised if we trend down a little lower off of puts for Oracle. And you can play this thing both ways, guys. If you want to take the puts, go ahead. If you want to take the calls, go ahead. Pfizer, exact same setup. 2 down green, hammer candle or inverse hammer or shooter candle. Magnitude's not great to the upside. It's only about 5 cents. So that's the play on Pfizer. Plug Power, 2 down green, and we can call this a hammer candle. We can look for calls at $20.01 and the first target at $20.12. The next target right up here at $20.59 on PLUG Plug Power. The Twitterverse inside bar, and that's a nice tight inside bar. We've got the full meal deal here, right here. Everything's green: the hourly, the daily, the weekly, the monthly, quarterly, and the yearly. Realistically, when I day trade, I only need the hourly and the daily in the same direction. Everything else is a bonus, meaning it's a higher probability that that trade is going to work out. And again, we base our trades off of probability and we manage our risk. So calls off the inside bar at $50.55, puts at $49.81, and you can see off the last inside bar we triggered and we didn't hit targets, but we still had a really, really good trade off of that play. And it would have been really hard to hit targets on this just because Twitter had such a big move up to the upside on October 4th. This inside bar, though, we had a nice run up. This inside bar, we had a nice run up. It gapped, but we ran up. This inside bar ran up and hit targets. And another thing I want to tell you guys, like every one of these candlesticks tells a story. And they're basically writing a book for us. And we need to read that book and just understand what is being written. So for simplicity's sake, I'll just use these lines here. This inside bar is saying, if I break above this line, you can buy me. And if I hit this, you have the opportunity to sell me for profit. If I'm triggering here, it's very probable, it's very likely that I'm going to hit this target here. And that's the story that the candlesticks are trying to tell you, but you need to understand those stories. Okay? They're simple stories, but you need to understand how to read them and what exactly they are saying, because every candlestick has a story to tell. And again, if you're looking for more information on this strategy and how to use it, end of the video, guys, bottom right hand corner. I've done a few series on SPY, how to trade SPY in the 30-minute. That's in the top right corner. So check out Beyonce. She's at the end of the page. She's going to show you where to click. Good luck trading on Wednesday, guys. Make sure you're following me on Twitter. Subscribe down below for more great videos just like this one and great learning tools all sent to you guys for free. And make sure you watch those ads on the videos. Let's get paid. Let's learn and earn together. And good luck, and we will see you guys all in the next one. Bye-bye.